Hey everybody, welcome back. A lot to go over today. We're going to talk about the sell-off in the midday, what it means, the rally into the close, what that means, and what to expect tomorrow with all the financials coming out. We should also talk about CPI. We have a lot to cover, so we're just going to jump right into it. First and foremost, you can see our head and shoulders is still there. It obviously has not gone away. And we are still fighting in here. Now, just the important distinctions of the following that, well, I think it's important that there is your left head and here is your right. So we can see that and we can clearly see our neckline in here. None of that has changed. Now, that's a very important distinction. We still have it. We flipped it. And now the question is, do we stay above it or do we break below it? And the answer is nobody knows. So we don't try to predict what's going to happen here. We analyze what did happen, and then we see if we can make a more informed decision and then utilize that decision to be profitable, right? That's what we try to do. We all see this DTL that's hanging in right here, and we can all see how we kind of almost made that lower low, but I like the fact that we didn't close below it, but I guess you could say you have the lower low because you have the wick, but I look at wicks as price rejection. Nevertheless, it's the first one that we've had, and they did a beautiful job setting up retail today, which we will get into. But the rally up, and we can see where we are just by popping these in, and so we're going to pop in our moving averages. And I'm not crazy about this. But this is what I have, and nobody really cares if I'm crazy about what happened today or not. It's going to happen, so it is what it is. But let's take out the 55 for a second. I use a 12, a 22, and a 55. We need to talk about the VIX. We need to talk about the bond market for sure, and we need to talk about the dollar. Now, what we're seeing in here is we closed over the 22 for the first time in about a month. Now, since then, we just closed back under it. I need 3 to 5 days above it. I made it 1. That doesn't make me feel warm and fuzzy. So that is something that I'm going to want to watch. Number 2, see the 50 right here? See how we got to the 50 and now we're starting to point down? This is RSI. And we got to the 50 and now we're starting to go sideways or point down. Another thing that doesn't make me warm and fuzzy. Number 3, if I come here and take a line, draw my line straight across, and then let's just say that we get the lower low tomorrow and that denotes a level. Let's just play devil's advocate for a second. Well, now I've got declining lines. I don't want declining lines. That's not good. So I need to watch this because these declining lines mean that we're going to accelerate to the downside. Now, I don't know that any of that's going to happen, but they are the things on the bear side that would concern me. If I was to be concerned and I was bearish, there are the things that I'm looking at and going, I'm not crazy about. Now, personally, I think there was a lot of gamesmanship today. We didn't have huge volume. We're going to get into the gamesmanship, but we should probably drill right in from the rip and get into CPI and what happened today. I think that's really very important so we can look at these levels and just understand exactly what the heck was going on. Now, to start with, we always mark that 5-minute bar. Sometimes we'll just mark it as a 1. You can do it either way, but you can see that 830 level right here on ES. I would just mark that off. And you always want to pay attention to what happens at 8:30 whenever you have an economic event. You can either use the 1 or the 5. Tries to break, fails, breaks down. Support becomes what? Resistance, right? So here you are trying to stay above, and then as soon as you broke, it becomes resistance, and it becomes what? Resistance again. Not rocket science. And then when it couldn't hold any longer, we cracked. Now, we've been cracking around the 1 o'clock level, and that is when the bond auction is going on. I'm going to just be real clear about this. It really doesn't make a lot of sense. And the reason it doesn't make a lot of sense is, and we're going to talk about the 10-year here, is because we already knew that we had an issue this morning. And so all of a sudden, they're just doing it at this particular time. To me, it's them just flushing us out, and then they're coming in and picking up stock. And I really do believe that. I'm going to show you what I mean by this in a moment. But you're kind of sliding your way up all day long and finding buyers. And then all of a sudden, you start to roll. And then what happens? You just start falling apart. And this is pretty technical stuff, guys. If you look at the 5 minutes here and you just start counting these off, and I'm not going to do it, but you don't even have a higher high till you get to here. And this is about as technical as you can get. Everybody should remember this 4350 level, especially if you're in there for the public live streams. We talk about these levels all the time and how they're playing out. You can see it right there. And we even put that out today that these were bounce levels in the community. Now, whenever I talk about the community, I just like showing the timestamp so you can see what's going on. CTAs are very short with my comments. They're the most short over 5 days the last 20 years. Dips should be bought And we'll go through what we actually bought on this dip in a moment via timestamp, so there's no doubt about it. And let's watch the 43.50. I'm leaning towards buying support levels versus shorts. And so what we're doing here is we're just looking at these charts when this is playing out. I always think it's great. Like, you watch how these things act, and then you have your game plan together. And then after your game plan's together, you see those levels actually hold. And you can see a little earlier in the day, around 2:22, we were talking about it right here. You see the timestamp. And then what we were doing was we were just watching these levels over and over again, saying, are we going to hold in here? And then we start to see the hold, and then we go from there, and that allows us to make a more informed decision. We don't know what's going to happen. Nobody does. But what you're doing is you're analyzing, and what we did was analyze the situation and then act accordingly, and it worked out very nicely at the end of the day. Not every trade worked out nicely, but some of them worked out extremely nicely. I'll show you in a moment here. But what we want to focus on is we held 43.50. So tomorrow, what is the level that you're going to want to watch if you are trading the ES? What are the levels that you're going to want to watch? And a lot of people are commenting that, hey, thanks for showing the S&P, but maybe don't spend so much time on it. Absolutely, I understand what you're saying. You're in one big trade right now. And for time's sake, I'm not going to bring out the stool, but you're in one big trade right now. Macro, fundamental, technical, right? So you're in that. And right now, that means it's all one big trade. And we have to watch how they're manipulating us. And believe me, they're manipulating us. And I think it was glaring today what they did. And let's get into it. So to start with, if we take a look at the Nasdaq, and you know where your levels are in the S&P, we've gone over it ad nauseum, and we just marked the same thing off. Here we are at 8:30. Here we are, and they kept trying to get over that level, rejection, 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 and the entire day you're just matumboed up here. You just cannot get above that level. That's always something for us to watch and always something for us to pay attention to, isn't it? We want to see how we're responding to that, and all you had to do was utilize this level and say, I need a higher high confirmation close. Once I get my higher high confirmation close on a 5-minute, this is a confirmed support level. Never got it all day. Isn't that crazy how that works? It's always amazing to me how this stuff actually works. So then you start to roll. Do I know that we're going to roll like this? No. Someone in the room pointed out, and they were 100% right when they did, that is a rising wedge, and they end in tears. And guess what happened? That ended in tears for people. Now, we were actually sellers in the morning. Now, I can show the timestamps on it. And then you actually came in and dropped. Once you dropped right around that 210 levels you just saw there, it was a nice time to step in and buy. But before we even get into trades, I do like your comments on showing the RSI videos. I'm definitely going to put an RSI video together. I'm hoping to have it done by this weekend, and we will go from there. But more importantly, where did we hold? I think that's the important thing. We held the 15.2. So if we just drop a line here for a second, right here, and look at that flip. Okay, this is what you want to pay attention to. Here's a reversal, and then you can decide to work off that. There's some other indicators here that I would utilize. You might want to take a look at the RSI and say, is it realistic to have a 10 RSI on a 5-minute? It's probably not sustainable. So that means that there is some kind of bounce out there. You just don't know when. I know people don't like the RSI to use it all the time. I'm a big user of it. I love it, and it works great. It kept me out of harm's way all day today, and it gave me a huge opportunity. So if people don't use it, I'm fine with it. It just gives me more of an edge. But if we take that moment and let's get this all cleaned off, and let's drop this into the hourly, and let's take this 15.2 level and just see, do we see anything out there? I mean, this gets pretty glaring, guys, when you start looking at these battlegrounds over and over at that level. I would not sleep on these levels. I think it's a really pivotal level, and you're constantly battling it all over the place here. And that's something that you want to pay attention to. But I think more important than this is if you watch the 1 minute and you look at this was just absolutely textbook, glaring, let's scare retail and let's take money from them. That's all this was. And you can see that very clearly here, because what happened right around, you got around 215, 230. And one of the things that you should be paying attention to, or hopefully you're getting, is that I didn't trade or learn how to trade via retail. The way that my mind works and how I was educated to trade was based upon what institutions are doing. This is when they start to buy, guys, 230. It is like clockwork. There is a reason that people actually chart, like Sediment Trader actually charts the last hour of the day and what happens. All these firms chart the last hour of the day, and there's a reason for that. Look at this reversal right as institutions are supposed to pick up. So what they do, they flush retail out. And when they flush retail out, and they get the stock, then they pick up the pieces of the names they want. We'll go through that and how you can differentiate these and how you can pick up the pieces faster. I'll show you a real quick way to do it so that you can sort super fast and find these ideas. And then you rallied up. Well, I always find this interesting to just kind of drop a line and say, well, if that's my movement, what happened today? Oh, okay, so we got cut in half and then we rallied back to the 50% level. I mean, it's glaring that this was a technical move, absolutely glaring. Now, if you take this before we get into the bond market and show you what's going on in the VIX. This is the dollar. So what we did with the dollar, we have our little trend line right here. You have your little reversal. I got it. CPI was higher. I get it. And that is something that could be an issue. It didn't go down. It stayed in line. Now, my goal is to add value, and I'm just going to drop this real quick because I don't think it's worth our time to spend that much on it. You were in line. Let's get to the arrow. In line, people were expecting this to come in. Goldman was telling people it was going to be lower. They were wrong. Regular CPI was a little bit higher. After PPI, you can't be shocked by this. What I think you should be shocked by is that the market didn't fall apart on a higher CPI number. I think that's what you should be shocked by. Now, you see the dollar rallying, but where is it? Where did it really go? Okay, we rallied a little bit. Did it get to anything of significance? Did we make a higher high? No, you still rejected the same level. You're trying to flip this lower channel. Maybe you're going to do it. Maybe it's going to roll back over. We don't know yet. But now you're wedged in here and you have a couple different a couple pieces of confluence that are going to play with us. My personal opinion of this entire situation is I don't think we're going to roll over. My thought has been that we're probably going to hit new highs on the market by the end of the year. But I don't know that, right? I want to be real clear about that for the people that will put comments below. I always love the comments. No one knows what's going to happen. So don't assume that. Don't tie your ego to it. What you're doing is you're trying to analyze so that you can make the best decision possible for where you are right now. If we drill into this and we take a look at the ES, I have the levels marked. You might want to pay attention to those. We looked at NQ. You have all those levels marked. You can shoot those right now. But let's talk about the bond market. Now, we can all see this rally in the bond market. We all saw this morning where we saw this last night, how they manipulated the market. And I think that this leaked that it was going to be a decent number, and then it was not a decent number. So I think somebody was dead wrong. Now you can see this flip, right? Once this flips, that's it. You're taking out the high. So then you come into that 1 o'clock and that auction number, and then they just lift you up. Now, what we're supposed to believe, and this is what gets to me, and I understand there's an auction here. I got it. But what we're supposed to believe is this 56 basis point move was the reason for the sell down, this move. Because even as the market, now pay attention to what I'm saying, even though rates went higher later in the day than they were at, miraculously, for some reason, the market reversed and equities started rallying. And we're going to talk about which ones rallied and which ones you should look at tomorrow in a moment here. But this has just got complete flim-flam written all over it. They utilize this to sell stock. And they sold, and then that's why you can go and look at your sells today. And if you sold into that, you can see most likely the majority of people that sold, the stocks went up against them. Now, who was picking up the stocks? Who was buying the stocks? It's not retail, it's institutions. So this is what we refer to in this channel as major flim-flam, and congratulations, you've been flim-flammed. So the question is, what happens now? Maybe we continue to revert, maybe we don't. They're not going to raise rates. They were pretty darn clear about it. You have 3 Fed speakers doing a tour. You had 14 different Fed speakers this week. No one's talking about raising rates. Pay attention when they speak. What they say, they're told what to say. Okay, they're told what to say. Just keep that in mind. Now, one of the things I always look at, and I think this is a very important distinction, once we get to 20, rule of thumb is that as soon as you get to 20 to 15, I've always looked at this and said, hey, when this starts to happen, okay, we get to a point where we need to look at this and say, okay, there might be a bottom in. So I always look at that 20 to 15 move and say, okay, there might be a bottom in. Now, I do a ton of reading, and I want to show you this one research piece because they walk through it and they actually analyze the data, back test it, and it might be something that you find interesting. I certainly did, and I think it'd be really helpful for people tomorrow. Now, the study in front of us is done by Sediment Trader. They have their watermark right there. They provide a service. I have no affiliation with them, but they do fairly good work and they do a lot of research, and I love looking at research, a little bit of a nerd with it. So bearish to bullish reversals in volatility. So when we were just showing the VIX and talking about the VIX, one of the things that I always look for is movement, meaning how fast and how volatile we are moving. I think that's a very important distinction, and it's definitely something that I pay attention to. Let me pull that a little bit over there, stretch that out just a little bit. So what I want to focus on is they're saying from bearish to bullish reversal. Well, how are they determining bearish and bullish? That's the very first thing we have to understand. What are the parameters that they're using? And they're using a 1-month VIX index, volatility index, range rank, and they're using it over what, 84 days. Okay, so now we know exactly what we're looking at, and what we're seeing is we're seeing a move about to 100%, which is pretty much their max fear level and the way that they're calculating this. Again, 1 month volatility index, rank, range, 84 day. So we can see these levels right here and know that you're only going to go to 100 and 0 based upon how they're calculating it. But what they are calculating is every time that we hit this 99 or 100 level, and then we cut under 60. Once we cut under 60, that's their trigger. And when they looked and backdated this. Now, I never really looked at it this way. I would always look for a drop of, let's say you spike to 25, and then all of a sudden you drop back down to 15 or 18. Usually when we would get to a third of a drop or 50% of a drop, you would notice a change in trend. They've done it and they've made it a lot prettier, and they've given it actually exact numbers. So I find that somewhat interesting. But if we take a look from 23 on, we've really only seen this once before, and that was March, and that was the regional bank. Now, if you think about the regional bank spot, and was that a good time to buy the index? And the answer is yes, it was. Then we come across here, and we're lining up the same way. You just kind of look at some of the other ones as well. Here was October, and that was our what? That was that CPI peak, and then you can see the spike after, and that led to a buy area as well. And then, of course, you can just kind of see the others and how they're aligned. Now, the purpose of me showing you this is not that it's a be-all, end-all, but what we're seeing is we're seeing on a lot of reading, and we'll get into this on Saturday, but I wanted everyone to be aware of this for tomorrow. You're seeing a lot of VIX collapsing and people not rushing out there and buying protection. And the question is why? You have not one war, you have two wars going on right now. You have a lot of issues going on. You have PPI hitting highs. You have CPI hitting highs, meaning they're making higher highs than we expected. That's what I'm referring to. And we're no longer seeing that type of fear where we need protection. So something's going on there. And I think that it's very important for us to understand it. Now, whenever I look at data like this, if they backtest it for us, that's really important because then we can utilize their backtesting. Now, what is backtesting? Some people will know this, some people will not. Again, this is Sentiment Trader. This is not my study, but I did find it fascinating. So they took a group and they made the group very specific to the exact criteria. And they came out with 9 signals over a period of time. Now, this probably is not exactly how I would backtest it, but this is how they did it, and this is the data that we have. But what we're going to do with these 9 signals is we're just going to see 1 week, 2 week, a month. And what these are these are durations after the signal triggered. What happened a week later, 2 weeks, a month, 2 months, 3 months, 6 months, a year. You get it. All right. The most important thing to me is this number right here. What percentage of the time that this happened were we positive? So anytime that we can find a bias or an average, we want that. We want that bias. Even if it was negative, we want the bias because then we know that we have edge the other way. So we don't really want to, you see a lot of people try to massage data to get it to say what they want it to say. It's the worst thing. If you find something, and even if it's a negative correlation, you still want it. You just want to do it the other way. You want the real correlation. So see how we're acting right in here, and look at these numbers, and they correlate right into here. When you see a movement like this, they're saying 6 months later, you're roughly going to be right in here, and then you're roughly up about 9%. 89% of the time, 88% of the time, you're up an average of 12.6%. If you look a month later, you're up an average of 3%, 78% of the time. 2 weeks later, you're up 2.7%, 78% of the time. It is very hard to find something like this that is going to give you that kind of percentage and that kind of return. Essentially, what it is telling you more than anything is that these are denoting bottoms, and then what happens from there, it's going to play out a little bit differently. So in other words, 2 weeks later, if something else happens, like in 94, it might not work out. You can see what was happening in 94. And you see some of these other moves, like what was happening here in 2000. It didn't matter in 2000. It was just a disaster. For those that were trading in it, they're fully aware. But what this does do is allow us to understand what are they calculating and what are we looking at, which is very clearly here. We're watching this huge precipitous drop, and it's triggering a buy signal for them in their system. And I thought that this was worth sharing. Please comment below if you like seeing this kind of stuff. I love this kind of stuff, and I utilize it all the time. Not so much as that you can just act off of it, but it does give you a basis, that underlying basis on what your foundation is going to be on. That basis helps us greatly. And I'll show you how to utilize this basis in a moment here, how you can actually get in trades based upon that. Now we're going to go through a bunch of names here. The important distinction that I want you to take away from tonight is, one, there are a lot of indicators that are pointing that the market may have bottomed. I know a lot of people are going to say we don't know that, and I do agree with that. We never know what's going to happen, and we really don't care. We just want to have a game plan. So we can all see this DTL right here, downward trend line. And why we want to focus on that is so we just know where we are. We can also see that doji that's sitting right there when we look at Apple. And we can also see our neckline right here and how we're able to get through that. And essentially we had that gap fill and then stop. Overlay the simplicity of it and see that we have closed above the 55 for the first time since breaking it back here. That is a distinction that I would certainly be paying attention to, back above the 50 on the RSI. These are all things that I look at. Now, does that mean that you should be jumping in and buying this right off the open? And the answer is yes and no, and I'm going to show you what I mean by that. So let's just drop to a very simple chart to start. You can see the DTL and what happened as soon as we hit it. DTL is downward trend line. So we had a day trade off the open of this, and it was very simple trade. We can just see it coming straight across. Let me just draw it out for you so that we can get into this. Here we are on the 12th. And then what we're looking for is we're watching how it affects this level. And we can see it in here, 1, 2, 3, trades up, and then we just pulled some money out, called it a day, and got out of the way. And what was the reason for doing that and getting out of the way? Not capturing this. I didn't like the positioning, and I'm going to walk you through this. So one of the things that I'm very big on, and I'm going to do a video on this, I've got enough comments on it that I think it's worth it. Let's just cut down the volume. Let's get rid of the moving average because I want you to pay attention to this. It had nothing to do with the fact that I don't think that the stock's going higher. I'm out of position, and when I'm out of position, I know that bad things can happen. And let me explain to you what I mean by that. This is just going to be a synopsis. I'm going to do a full video on this. See right here and here, how you're hitting that double top. That's not the issue. The issue is here when it starts. My RSI line, and I have proprietary indicators set, but on my RSI line, I'm in the 90s on a 5-minute chart. This is not sustainable. It doesn't matter what stock you're in. It doesn't matter if you believe in RSI or don't believe in RSI. It's there and it works. So when you're up here, it's not a question of, are you going to do this? That's not the question. The question is, this has nowhere to go. If this determines the magnitude of the move over this specific period of time and what's going on right now, and it's maxed out, you really don't have anywhere to go. If you're at max the velocity or magnitude of the move, how do you go any higher? The answer is you don't. And you can believe in it all you want. So I always say it's like gravity, and then someone will say, well, if it worked 100% of the time, and I get it. You're going to have these days where you're going to cut down like this, and then it's going to bounce, and you're going to say, oh, I told you, I knew this was going to happen, and I'm watching him with his fancy RSI. Try not to laugh, but you know where I'm going with this. And so here's the double top, here's the undercut. Okay, look at the undercut here. So I want to own this. I want to own it at the right price. Now, I'm declining here. I'm flat here. That is a negative divergence. If you're buying this breakout, you've already lost because the majority of time you have no edge. The edge that I have is selling into the people that are buying here. If you're buying that breakout and saying, oh, I'm going to watch it flip this DTL and then I'm going to buy the push and that's going to be my stop, you're my exit liquidity right there. Okay. I want to just be real clear about this. The way that you learn to trade, if you were doing it through the pandemic, it will not work in this market. Right? You're playing against the smartest, most disciplined people in the world, and this is a classic setup today. You do not have 1.7 trillion behind you. They can manipulate the market, and they do. Okay? When I'm referring to market makers, institutions, option guys that are out of position, this was like clockwork. The bond market did not miraculously turn around at 2 o'clock today. That did not happen. Maybe it went up a basis point, but out of that move, this is what happened. If you start looking at names like Apple, up 1%, you had a $2 move in Apple off of here. And this is exactly what we were waiting for. We didn't want to buy here. Now I'm buying down here. I have a 12 RSI. I know for a fact that 0 is not a possibility. Okay, you can't go past 0. So I'm at 12. Now, if I got into single digits, to me, it's almost an outright buy on a 5-minute chart. It wasn't. I did an RSI video before, but I really am looking forward to doing this next one. So stay tuned when it's done. But this was a really simple trade. We trade up and we go across, and I just put an alert out there. Now I want to show you something. You'll note that the timestamp here. So we had day trades that we did during the day. And when I'm live trading, someone else posts those. So I'm not going to get into all that right now. And there were names that we did, great. Swing trades. So you see how we broke down at 1 o'clock on the market? I take advantage of that. The very first thing we do is we've been wanting to short Netflix, I should say. I've been wanting to short Netflix. And I thought I wanted to do it through options. There's a reason for it. And we're up in the options, and we're quite happy with the option trade. And we trimmed, we made 10%, we trimmed, and then we just went through it. This was a day trade at 138. This day trade did not work out. Okay, not everything that I do works. Be really clear about that. If I'm at 55 to 57%, I am doing cartwheels, right? I am killing it if I am there. So if I look at Apple, Look at where we got in at. That's our entry. Okay, that's our stop. There was a Google scalp trade we did, and then look at this at 241. We're going to walk through these trades in a second, and then look at how we stagger the stop. Okay, look at what happens by the end of the day. We're up $11. What do? We pull money out. Why? Because we understand the market environment that we're in. Now, we could have done the same thing with Apple, where that is after hours, but whether or not you do that or not is not the point. The point is that you're utilizing a system, and that system provides an edge. The majority of people think that if we rally, we're going to continue to rally. If we fall, we're going to continue to fall. That's not the stock market. That's manipulation. And we don't have the same manipulation in the market that we have right now. We don't have that. You don't have zero interest rates. And the majority of people, candidly, that have been trading for a decade, they have no idea because they've never not seen a zero interest rate environment. And so if you have a lot of names, if you're retail and you have a lot of names on margin and you're paying 8%, you're going to clean house and come back and put them on. Well, it's not just you that's doing that, it's everybody. And that's exactly the kind of behavior that's going on here. And we have to understand that so that we can profit from it. So Apple's wedged in here. We're up 2 on the trade. You can see how we did that. Same thing I want to walk through with AVGO. This was beautiful. We had guys in the room that bought it off the rip. We were watching it yesterday. I did not buy this off the rip. There were other names I was much more interested in. I did a lot of trading in and out of NVIDIA today, but this was just an absolute monster trade for them, and congratulations to having their game plan put together and pulling it off. They did very well with it. You can see the DTL break. I mean, it was just really nice, but right off the open, it was just a gap and go, and that was it, and it just ripped. But do you want to be up here buying it when you have a negative RSI divergence? No, because you're someone's exit liquidity. And then it starts breaking down. Then you don't have a game plan. And then you start seeing it here. And now by this point, surely it's going to break down, right? And everybody here is saying, well, look at that chart. Now just picture looking at this chart for a minute, and let's just play this out. So if you're watching this and you're starting to see it, it's up, it's rallied, start looking at your RSI. See how your RSI is starting to roll over? See how this is going higher, but the RSI already peaked at 97. You're already pointing down. And look at how this is going and how that's going up. Let's follow. All right. See how the RSI continues to drop? See how we're leveling off up here? Right. Then they give you that last push over. And look what happens on that last push. Take out the low, and then you break the 70. As soon as you break the 70, that's actually a short-term sell signal. And then you start trading down. Now, as soon as you trade down, if you are right here and you are looking at that chart, not over here, but if you are right here and you're looking down, so you're right here looking at this, and then you bounce. Look at what's happening right here with the RSI. Look what's happening with your chart. Look at your support level. Right? So when you go back and you look and say, hey, well, was that an area that was of interest? The answer is yes, but for me, it's not enough. And the answer is, well, why? Because I need to get over the control bar. I need to get over that control bar to get involved. If that means that it costs me an extra couple dollars, then it costs me a couple extra dollars. Now watch this play out. And you can see all of a sudden that level becomes support. Let's drill into this. So all of a sudden that level becomes support, right? We can't break it. Towards the end of the day, that 350 level, we get a spike. Right into that spike, 352, what do? We trim into it. We're selling into the liquidity. We're not out there going, oh, we're going to break out and run and we're going to take out new highs. No, we're now selling to those that want to buy into the market on close. It's a very different mentality. And if you want to survive in this market, which is going to be what the market's going to be like for a very long time, because you're not going to see the kind of intervention that you once saw. That's how you need to trade. That's how you need to learn to trade. It's really that simple. You have to learn how to do what I just showed you. And whether you do it with RSI, you do it with MACD, whether you do it with your own system, you're going to have to approach this like a business or you're going to get torn apart. And you need to be methodical. The days of just watching some guy buy things and saying, oh, he's so good, look at his alerts, those days are over. Okay, those days are over. That's why the people that were doing it in 2020, 21, that's why what they're doing is not working anymore, because the Fed balance sheet is absolutely imploded since then. Now, if you look at AVGO, this might be something that you want to kind of pay attention to. It's one heck of a W that you have there, and you might want to start watching this. You might want to start watching the SOX and the way that this is acting. I think that the SOX looks absolutely amazing. You're not able to get over that 55 yet, but you're touching it, which is exactly what we want to see, and we're seeing this kind of behavior in the leading names. Now, it's really hard when you start looking at these leading names to not start getting a little excited. And I do like them. It doesn't mean that they're always going to rally. It doesn't mean that you're not going to have pullbacks. Like I think Netflix is the one that looks like it's got issues. Here we are again, NVIDIA's rallying. All these names are rallying. SMCI's down and pulled back 5%. If you remember yesterday's video and the day before, I was explaining why we were pulling money when we were up $30. Because you're not in a perfect environment, right? You're still trading around trying to figure out what we're going to be when we grow up. We look at Tesla, one day things are good, the next day everybody's worried about lithium. I would just focus on this, and this is from somebody that's still net long this and has a long-term position on it. We try to get through again. That's a rejection. As much as I like my long-term trade, I have to accept what happened today. Tesla hit a lower low. Apple didn't, so we can't blame it on the market. We start going through the names. Microsoft had really bad news. That didn't break down, right? So we don't make excuses for our stocks. We actually believe what the market's showing us, and we utilize that data to make better decisions. I hope this was helpful. That's it.